The KBC economic perspectives of March 2019 are strongly influenced by the ECB decision and announcement at the beginning of this month. The ECB has put forward new forecasts for inflation and growth, and both are revised downward compared to previous forecasts. Obviously, this was no surprise given that all international institutions have lowered their growth and inflation forecasts for 2019 and for next years. Nevertheless, the ECB message came as a surprise to financial markets, and we see a clear market reactions to these ECB decisions. What do we expect more precisely? Well, we expect that the European Central Bank, based on lower inflation expectations, will wait before it will increase policy rates again. This implies that we will have lower policy rates, lower short-term rates for a longer period. We expect that the ECB will only raise interest rates next year in 2020 to get away from the negative interest rates, and we have to wait until 2021 in order to have new positive interest rates in the euro area. This has obviously major implications, and one of the things that we noticed in financial markets is that also the long-term interest rates are reacting to this new environment. Generally speaking, if short-term interest rates stay lower for longer, this implies also that in the longer run, the longer-term interest rates will remain lower. Moreover, lower inflation expectations also have a negative effect on long-term interest rates. And finally, one can also argue that in an environment of lots of uncertainties, investors are looking for so-called safe havens, and therefore they prefer very low German interest rates to any more risky asset. And that explains why the German Bund rate is going towards 0% again. So therefore, KBC expects that the interest rate normalization will take a while. We only expect interest rate increases in 2020 and later on in 2021, so not yet in 2019 as previously announced by the European Central Bank. We also expect that the euro-dollar will be affected by this environment. We expect the American dollar to remain stronger, so that the general euro appreciation that we expect in the longer run is postponed as well. And then finally, also for the long-term interest rates, we expect that they will stay lower for longer again. After the US shut down, we had to wait a little bit before we got new American figures, but now we are receiving new statistical data. And it appears that the end of 2018, the fourth quarter, actually was a relatively strong quarter in terms of growth, real economic growth, but slightly lower than in the second and third quarter of last year. So this implies that also the US economy is facing a slowdown, similar to what we see elsewhere in the world. Now, this slowdown was something we expected, and it goes, of course, also hand in hand with lower inflation expectations and with a more cautious Federal Reserve. Nevertheless, we expect that the American economy will continue its slowdown in 2019 and also in the following years. So gradually we'll see that also the US economy will join the global trend of lower growth. One of the reasons why the global economic outlook has become more pessimistic is obviously the trade war. The trade war that is still going on between the United States and China. Nevertheless, there are some hopeful signals that the US and China may reach a trade agreement to deal with some of the major trade issues that both are facing in their relationship. On the other hand, there are many structural issues related to trade and investments, which probably will cause some concerns to the US and China also in the longer run. So a temporary deal between the US and China is not yet a guarantee that there will be no persistence of trade conflicts in the future. Also for Europe, it's very good news, obviously, that there will be a trade deal between the US and China. Europe as an open economy needs access to global markets, and in particular the large US and Chinese markets are very important for European exporters. On the other hand, if the US reaches a deal with China, it might be an opportunity to look at Europe at the same time. Currently, the Trump administration is watching trends in European exports of cars to the US market, and maybe those European car exports will be considered as a strategic threat to the US economy. If that's the case, the US might decide to impose higher tariffs on European cars, and that would obviously be very negative news for the European economy. So to conclude, we can say that the KBC economic scenario has become more pessimistic compared to previous month, and this is because we want to be more cautious. We are cautious because there are many international uncertainties like the trade war, like Brexit, which may lead to lower growth in the short run. Nevertheless, we remain optimistic that growth will recover, and we see lots of positive signals for that. We still see a strong performance in European and even global labor markets. We still see lots of investment growth in the world, and those factors may ultimately support economic growth in the longer run. So we remain cautious, but on the other hand, we are optimistic that growth might recover in the short run.